Buying versus renting, that's a very old question and dilemma. Let's put some numbers next to those two options, see which one is better for you, because there is no universal and general truth, right? So, beautiful bungalow in East Windsor, 3 bedrooms, 1 washroom on crawl space. Everything was updated, as you can see. Siding is newer, cement driveway in front and the back. Tiles, freshly painted pot lights, vinyl flooring, trim doors, kitchen, stainless steel appliances. Not the highest quality, but they are in a good condition. Washroom, everything was updated probably in the last 5 years, I would say, or less. What is the asking for this rental? $2,200 per month. Now let's talk about buying this house. This kind of house today, I would say it's around $430, $440. Let's see what means this kind of loan. So for a $440,000 loan, the best rate today it's around $429 for 5 years fixed mortgage, for fixed interest rate with a 25 years amortization. So the mortgage would be $2,384, which obviously it's higher than the rent, but that's not the full story. A bit more you can see here in the amortization schedule, where you can see clearly that your mortgage, it's composed out of 2 different elements, principal and interest. Principal, basically each month you pay something towards your loan, and obviously the interest on the money that you got from the bank. Now each month you pay something and the interest is gonna decrease because your balance is decreasing. It's gonna continue like this. Each month your principal is gonna be a bit higher, your interest is gonna be a bit lower, while the mortgage is gonna stay the same for 5 years. That means 60 months. Now let's try to make an average. After 60 months, you can see you are here, basically straightforward, paying over $60,000 from your loan, but it's not completely accurate. And let's use a calculator. The last month you are paying $1,016, and in the first one you are paying towards your principal $825. Average, I would say it's $920 that you are paying towards your principal each month. Now, going back, it was $2,200. Your mortgage is $2,384. So let's adjust our numbers. What's the difference? Minus $185. We are still not there. You still have to pay as owner. As tenant you pay nothing extra, just your tenant insurance probably. As owner you still have to pay your property taxes for that kind of house. In Windsor today you're looking around $2,500 to $2,700 per year, obviously. So let's say 200 is just easier for me to do the math. Minus 200, and you still have insurance on that property. Now the insurance depends on the house, depends on you, depends on your insurer, depends on what else do you have insured with them. So let's say roughly $100 per month, and you're left with $435, how should I say, clean net money that you pay towards your loan. And times 12 months a year means $5,000 per year. Times 5 years means $26,000 that you pay towards your loan after your property tax, after your insurance. So I would say that's a good amount. Again, living in the same house that you would be renting, just because you bought it. And there is one more step, because as you know, houses tend to appreciate over time, not every year, not always going up, but medium and long term, the prices tend to go up. And I would say a fair number is 3% appreciation year over year. Depends exactly on the period of time, can be higher, but anywhere between 3 and 5, that's a fair number, I would say. Feel free to do your research about this. So let's take a 40,000 house times 3% means around 13,000 price increase per year. Now, over 5 years, that's $66,000 that you are getting in the price increase because you live in that house and you bought it, or probably you are missing it if you are just a tenant. Now, doing the full math, adding those two numbers, 26,000, you are looking at 92,000. That's more or less the cost of that peace of mind if you just rent the house, right? Because when you rent the house, you know, whatever happens, you more or less, you don't care. You call the landlord. If you wanna move out and your contract is done, you can just move out after the first year, and you don't have to think about having a long-term contract with the bank. But that's the cost for the first 5 years, right? 92,000. Safe to assume over 10 years you are probably looking at double this, right? So keep that in mind. Hopefully it's gonna make your decision a bit more educated.